Discover how Trump's drill, baby drill slogan impacts Singapore's offshore investments and what it means for your portfolio in the evolving energy market. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2023 Influential Tigers by Tiger Brokers with over 768,000 reads and 53,000 likes. I've produced over 650 videos with more than 300,000 watch hours as of December 2024. I also focus on regional and world economy topics. Today's topic is one that ties global politics to investment opportunities here in Singapore. You've probably heard of Donald Trump's famous slogan, "Drill, baby, drill." While it sounds like a rallying cry for aggressive oil production, its actual impact on the oil and gas industry might surprise you, and it has implications for Singapore's offshore and marine sector. Let's break this down together. Trump's energy policies have undoubtedly influenced global oil and gas sentiments. His administration was known for being pro-oil, rolling back regulations and encouraging domestic production. But here's where it gets interesting. This hasn't translated into the massive drilling boom you might expect. ExxonMobil, one of the largest oil companies in the world, has reported that American producers are holding back on aggressive spending. Instead of rushing into new drilling projects, they're staying cautious. This means that despite Trump's bold rhetoric, the reality on the ground is much more measured. Now, why does this matter to us here in Singapore? Well, our offshore and marine industries are closely tied to global oil markets. UOB Kay Hian, a leading investment firm in Singapore, has maintained an overweight view on offshore and marine counters. This means they're optimistic about the sector's growth potential. They're betting on increased drilling activity driving demand for services like oil rigs and support vessels, industries where Singaporean companies like Keppel Corporation and Sembcorp Marine play a big role. But here's where things get tricky. Exxon's cautious outlook suggests that this surge in drilling activity might not happen as quickly as some expect. If American producers remain conservative with their spending, it could mean slower growth for offshore services globally. This creates a mixed picture for investors. On one hand, there's optimism from firms like UOB Kay Hian. On the other hand, there's a reality check from industry giants like Exxon. Let me give you an example to make this more relatable. Keppel Corporation is one of Singapore's leading players in the offshore and marine sector. They've been smart about diversifying their portfolio. While they still build oil rigs and provide related services, they're also investing heavily in renewable energy solutions like offshore wind farms. Think of it this way. If oil rigs are their traditional bread and butter, then renewable energy is like them adding healthy salads to their menu to cater to changing tastes. By doing this, Keppel balances risks associated with volatile oil prices while positioning itself for long-term growth in a greener energy market. So what does all this mean for you as an investor? First off, don't get carried away by slogans or overly optimistic predictions. The energy sector is complex and influenced by many factors beyond political rhetoric. Think global oil demand, technological advancements, and even environmental regulations pushing for cleaner energy sources. Second, consider diversification when looking at opportunities in this space. Companies like Keppel are showing us that it's possible to thrive by adapting to changing market conditions. If you're investing in offshore and marine counters or related industries, look for firms that are innovating or expanding into new areas. Lastly, keep an eye on global trends because Singapore doesn't operate in isolation. Our economy is deeply connected to international markets. If American producers remain cautious about drilling activity, it could impact demand for our offshore services. Now let's talk about some challenges you should keep in mind before jumping into this sector. One major limitation is the uncertainty surrounding oil prices. They can be highly volatile due to geopolitical events or shifts in supply and demand. Another factor is the growing push towards renewable energy globally. While this presents opportunities for companies willing to adapt, it also means traditional oil-focused businesses could face declining demand over time. Additionally, regulatory changes can create hurdles or opportunities depending on how companies position themselves. For example, stricter environmental laws could make it harder for traditional drilling projects to move forward, but might open doors for renewable energy investments. Here's another way to think about it. Investing in traditional oil-related industries today is a bit like betting on CDs when everyone else is moving towards Spotify or Apple Music for streaming. It can still work if you know what you're doing, but requires careful timing and strategy. Let me share another example closer to home. Sembcorp Marine has been actively restructuring its operations to focus on sustainability while maintaining its core capabilities in marine engineering. This dual approach allows them to stay competitive while preparing for future shifts in market demand. So what are the key takeaways here? First, Trump's drill, baby drill slogan may not have sparked the drilling boom some anticipated, but it has highlighted important dynamics in the energy market that investors need to understand. Second, Singaporean companies like Keppel Corporation are adapting smartly by diversifying into renewables while maintaining their core businesses, a strategy worth paying attention to as an investor. If you're considering investments in this space, focus on companies that show resilience and adaptability in a changing market environment. And always remember to weigh risks carefully, whether it's fluctuating oil prices or regulatory challenges. Before we wrap up today's discussion, what do you think? Are you optimistic about Singapore's offshore sector, or do you see more potential elsewhere? Share your thoughts below. I'd love to hear from you. If you found this video helpful or learned something new about how global trends impact Singaporean investments, give it a thumbs up and share it with your friends who might benefit too. Don't forget to subscribe if you haven't already. We've got plenty more content coming your way. Thanks for tuning in. Until next time, stay curious and keep investing smartly.